All right, good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, now I am doing a recording today because my schedule got kind of shifted a little bit, and I will not be on at my regular time. And I did miss yesterday, so there's a lot that I have to go over. And let me see, there's a couple of things I wrote down. That's for something else. That's for something else. Okay, let's do it this way. Hold on. Let me grab that here. Put that away so that we don't misplace it for next time when I need it. And bear with me. I'm gonna grab. All right. So the first thing I want to kind of bring up is that yesterday was a very unorthodox day. Um, the opening range breakout was affected a lot because something similar to what I kind of explained to y'all before with market dominance is that there's these times where we get these pockets of consolidation, and I want to kind of point these two things out. There we go. That's one, and then this is number two. Okay. All right. If you haven't been to one of my mindset classes, I talk about this a lot because this can be the trickiest thing out of all when it comes down to trading. Make sure my camera is right. All right, I think this is right. Okay, there we go. Let's fix this slightly. All right, cool. All right, so the first thing I want to kind of point out is that there's the accumulation phase, right? We're not breaking out and we're not breaking down, so that kind of creates that no, we're not, and no, we're not, right? So that means if we're both not doing something, then that means we are accumulating. If we are breaking out and breaking down, then we're accumulating the other way. So this is what I want to kind of point out in that regard, right? So we got the chart. That's the wrong one. That's the one with my other camera. Let's go with this one. All right. So the one that I want to kind of point out is this price action right around here on the 45 minute, right? And if you haven't been in one of my floors before, we only do open and range breakout, and we also do market dominance, an indicator that I kind of created to kind of tell me what the next candle could be. You know, for the most part, of course, you still need technical analysis because no indicator gives you all the answers, right? But if we come over here to the 15 minute, right, you'll see our opening range breakout. Where are you? Not there. We are on the 5th. That's 5 a.m. There we go. All right. So our opening range breakout was somewhere around here as far as what we built, right? So our 930 candle is right here, and we would be bullish above this level, and we would be bearish below that level, right? So now we're gonna go ahead and update that, bearish and bullish. So that is our range. Look at the type of price action that happened. So we had a massive little move right here where we kind of came in and just pushed up. They established it. What was funny about yesterday was because of how it was looking, it looked like it couldn't stay there long. That's a lie. The market can do whatever it wants, however it wants. And you could see right around this area, it pushed up like it was going to go out. Then they liquidated everybody that thought it was going to push up. Then it pushed all the way down before this candle closed on the 50. And then this is a 15-minute chart, just to let you know, right? And it basically liquidated everybody that thought it was going to go down. They attempted to go down again. They could not take that low, and then they attempted again, and then again, and then again, and then one more sweep. This whole thing right here is what is accumulation, right in here. You can get this as order block, and it was a very vicious order block. Let's connect as many as we can. Let's call it this, right? this right here is kind of where your smart money kind of comes in. Can you get these? Yes, very possible, but it can be very tricky. It's more of an advanced technique. If you're new to trading, I don't suggest you trying it, because you would have to weather this, right? We had to push down, then you realize we're coming to like a strong EMA, like my 200 EMA, which is this blue line, and we're breaking above it. And then when we attempted to take it out again, we already know towards the left is an order block, which is these areas right here. And you have to anticipate, because these are massive moves, anticipate that this is going to push all the way back up. Remember, before this candle turns into this, let me give a little quick replay. Do I have a multi-chart? Oh, I do have a multi-chart. All right, reset and change. Let me fix that. All right. So before this candle happens, to kind of give you a little of a preface, I guess that's the word I'm going to say. Here's the first minute. Here's the second minute. Third, fourth. You have to have confidence, because this happened around the fourth minute, that this is not going to go below this level. Again, this is very attainable, but you're talking about a 36 tick stop loss. So that means you're probably going to have somewhere around 40 to 50 to handle that, right? Depending on your leverage. So that's the tricky part. But we can all agree that the accumulation, where we broke out of here, we kind of thought that this accumulation will probably be over, especially being in here. That's an order block also, and they used that order block as support to continue to drill this down. They could not. This is curling. It's on the bullish side, but it is still curling, and having the confidence of seeing this and still take it to the upside, because after that, that happens. And then you should have so much cushion on these, because again, this is a very strong move, and you have to be willing to let it come below here. So you're going to be sacrificing maybe about 90 ticks or so to see this through. Very tricky, very advanced in itself, and being able to handle that type of leverage. So let me go ahead and get rid of the replay. Right? So when it was all said and done with this opening range, as we kept on sweeping this is called a bit, I don't want to call it that, but I'm going to call it anyways, because this is kind of that megaphone type of pattern, right? This right here usually tell you you're going to get a reversal, because we're making higher highs and making lower lows between this range right in here, which I think is part of the liquidation that happened here. And when they saw there was no follow through here, they were like, holy crap, let's get the hell out of here. And that was that push. So I think this was a massive attempt at bullish liquidation sweep. They noticed they couldn't get that, and then we had this massive move to the upside. That's what we're built on right here. So the other part I wanted to explain is that the 5 minute we're giving the signals, right? The 5 minutes we're giving the signals. So let's go to the 5 minute. Here's our 5 minute chart. Here's our area. Our opening range breakout was done at 9:30. So that's this right here. Nice solid low. Hold on. Actually, pause. Did I grab the wrong one? I think I might have grabbed the wrong one. 15 minute. Oh, I'm in the wrong date. I'm like, wait a minute. Something's not right here. Hold on. 9:50, 9:30, 9:30 to 9:45. All right, cool. So I'm in the right spot here. All right. 5 minute. All right, there we go. I don't know. I think I was at the right spot the first time. All right, so here's 9:30, 9:35, 9:45, right? So right in this area. This didn't give no upside, so didn't take that. This didn't take no upside, didn't take that. Then it came down, and then there was this massive move back and forth, and then 10 o'clock to 10:05, we had to close below here. That was the move. Didn't go, didn't go, didn't go, didn't go. And you would have to weather if you were in that close. And I've taught y'all this. Do not have such a crazy stop loss. I hope y'all was operating with a 177 tick stop loss, because all you were gaining for every one of those 177 max was about 37 ticks. So that means the bears were not in control, even though. So that said, we were going to be bullish, and here's our opening range breakout here, and this was painful in itself too. So here is a close here and a continuation. So if you caught this close, you probably squeezed out about, where are you? Come on, get there. About 50 ticks. That was about 50 ticks. But then you get drawn down about 71 ticks or even 93 ticks. After, and I was explaining this to my wife, I was like, after a while of this whole dance, I got real fatigued around here. This one was driving me a little crazy because they had this nice push up. I tightened up my stop because of the experience that I was experiencing here, so I got out the way. But I just walked away. I was like, I'm done. There's just no way they're gonna hold this again. We put in a perfect morning star right here on the 5-minute, right on this curl. So this tells us that the bears just had no control at this level, and this thing just took off for the rest of the day. So what I wanted to point out is understanding where you are in the market. I knew there was an accumulation phase right here, and it was very, very tricky for us to be able to operate. And I get it. It is what it is, right? But at the same time, breaking out, not breaking down, right? So this one right here was not breaking down and was not breaking down, well, down here, not breaking down, but it was breaking out for a little bit, right? So when it started to break down a little bit, this is your low accumulation that's right here. So that means we were playing to the downside. But when it started to fail, it did a reaccumulation because we wasn't making any more lower lows. So now it went from breaking down, yes, not breaking out, but it was also because of this order block, right in this little golden area. But now it went from, no, we're not breaking out, but we are breaking out, to no, we're not breaking out, and we are not breaking down. That's these areas here. We have breaking out but not breaking down, so we're playing to the upside. But when we started making these lower lows, we're not breaking out anymore, and we were struggling, but we were using this order block. Of course, hindsight is always 20/20. So when I actually boxed this out, I was like, oh, we kind of use what was previous resistance, probably a higher time frame, as support, and that was that order block. And then you had this little area right here where they did one last retest. So this was the breakout, retest, came back out. So this was breaking out, was not breaking down, because again, we were making lows, but we didn't make any lows to get out of the box. That's where this kind of reversed. So the main part of this to explain is to make sure y'all understand that this area here, the stairway to fail, is very, very attainable. It is, because this is probably the most easiest thing. You can take some high probability trades, but you have a terrible trade setup, and this thing can automatically get you into the frustration line, inconsistent battle zone where you're fighting against yourself and the market. And these are the things that make traders quit. But my goal is to get you out of the stairway to fail. See where you get some things that work for you because you got high probability trades. Try to get you out of luck because maybe some of y'all got some funded accounts, but you just can't keep them. This is where the luck comes in. And then kind of get you around that dedication drive. It's not super high probability, but you're following your trade structure. I feel trade structure is the most important part. As long as you're following it, you follow your trade setup, you didn't break any of your rules, it follows the structure of the market. This is when you start to get that dedication and you cross over to the profitable zone. So how can you get that? Well, there is a little thing I kind of look at. It's basically the trading scales of profitability is the ratio of charting to trading both are actions needed to become a profitable trader, has to follow a ratio based on time of 2 to 1. So what is the law? The law of profitability is for every minute of trading that you're going to be physically operating, keying off on trading, there should be at least 2 minutes minimum equivalent of the plan and the points of execution. So if you're going to do an opening range breakout based on the 15-minute and you're going to try to accumulate multiple 15 minutes, at the very least, chart out 45 minutes of all the previous actions. So what does that mean? So in this 15-minute chart, if we come back over to here, in this 15-minute chart, we had something that was very, how can I say, telling for the most part. So we have our Sunday Monday drop, right? We got that. If we take a nice little trend line, where's my toolbox? Oh, there it is, right? If we take a trend line, they should put like a little border around this so that way I can be able to see it sometimes. Sometimes I get lost in it. This is our trend line. See something? Y'all see anything? All right, y'all probably don't see it. All right, let me just do it a little differently. Here's this angle right here. I'm gonna do it with my deviations like I do before. Boom, boom, boom. Put that one right there. That one kind of broke through. This one didn't make a higher high yet, so your chart would probably look like this, right? So this right here is an order block because of this right here, right? And this is why it's very important to chart before the market and just plot out things that you just see. It's nothing difficult for charting. It's just this looks like this and that looks like that, and then you're just doing what you can as far as making sure that the levels are where they are, right? So if we kind of see nice uptrend from here to here, and that's what created this gap. We've never broken that trend. That trend is still in place, and right now we're breaking down around here, but we're coming off of this pivot, and technically this would be our downtrend angles. Well, this one's kind of flattish, right? And a nice little flattish here. So let's just say we took this angle, not that one. So what do we see? Well, first, we got ourselves a micro trend, which is this one right here, that is beating a major trend that's coming off of here. That is our downtrend, and we are failing to break below it. Here's another angle of it right here. So this accumulation phase was kind of noticeable. You could almost anticipate it. If we wasn't closing below this line for opening range, no one was going to go ahead and pile in to try to play this. There's a downside. Same with here, same with there. 1, 2, 3. These three. This is the one that established our opening range breakout. This is the one where they attempted to get down there with the megaphone pattern. This is the reversal of that megaphone pattern, which should have had some follow through. They used the 200. So there was a lot of confluences and theses that came into this middle point. So if you just came in 5 minutes before the market opens, right? And you're like, all right, let me just go ahead and plot out my opening range breakout. Bang, bang. After that, after you plot out your opening range breakout, you just look at this and you're looking very tight. This is what I call looking at the tree versus the forest. While you're trying to play it to the downside, there's a forest fire right here liquidating any bear that comes close to it, right? But you did not follow through with your trading scales of profitability following the JD law of profitability. For every minute that you're going to trade, you need to chart out. So the first instinct that would happen would be you'll look at this, take an opportunity, and yeah, I'm not going to play inside the ranges. Well, I don't like to play inside the ranges. And then I wanted to go ahead and take it to the downside when we break below on the 5 minute, which it did. Let's go ahead back to the 5 minute, which it did. That close. And the first instinct is, oh, let me just go ahead and tighten my stop if you're a sound trader, because I'm not going to turn around and had this much in green, 22 ticks, just for me to lose more than 22 ticks all the way down to 100, right? So either small loss, average loss, or you got a major drawdown. One or the other that happened here. And then you get JD like, oh, JD, this 15-minute open range stuff doesn't work out. Don't message me that, because I'm just going to ignore you. That's not the truth. You just didn't follow the rules, and you didn't follow the rules of profitability. Then we get over to here, open range breakout. This gave some opportunity where you locked in 50 ticks, didn't go far. Let's just say you took 20. This one broke out again right about here. Before it got to here, it had to draw down 65 ticks. Small loss. Maybe you just risked the 20 ticks. It closed again right here. You probably would have been inside of here. Right all the way up. It peaked out at 161 ticks before it turned back around. That's the W. If you stuck with it and you was like, oh, they're pulling it back, notice that, oh, we're not going down further, and then you just respect the range and don't play inside of ranges because you don't have the skills for it yet. When it closed here, this was your pullback, 33 ticks just for the takeoff for the rest of the day, and you probably could have enjoyed this with 125 positive, pulls back 70, gets back 150, pulls back 50, gets back up in here, and you're like enjoying this whole entire ride. So I get it. It's not easy to follow the trading scales profitability, especially if you're looking at smaller time frames, less than 1 minute, and everything else. I'm not worrying about that. What I'm worried about is I want you to chart before, at least give you, since you're going to do opening range breakouts, and you're probably going to do about 15 to 45 minutes of holding on to a trade, give or take, at least get on an hour before. Hour and a half preferably, but an hour before. See what the market looks like. Draw your lines, draw your levels, block out your order blocks, see what it can do, what it can't do, fair value gaps, all that stuff. Look at it and make sure that you're seeing what you're seeing. Because the second law here is very simple. It's basically saying charting is equal to but not limited to trend lines, fib retracements or extensions. I should probably put fib extensions as well. Order blocks, channels, accountability suggestions. Maybe you got an accountability partner that helps you with, whatever it is when it comes down to charting. Community floors. If you have some floors that you go to that's not mine as well, or whatever the case may be, asking questions like, hey, why are we pulling back like this? Maybe they could see something that you haven't seen. Do that 45 minutes before. Charting classes. That way you can learn some techniques. If you want some one-on-ones, I'm reopening my one-on-one after February 14th. And then the 3 W's. I already told y'all about the 3 W's, which is basically your why are you looking at the market? Well, in this case, it was open and range breakout. What is my entry? That's the place where you're going to be looking at, all right, I need that 5 minute to close above. I've already gave you 2 parts. I gave you 2 of them. All you have to do is follow your win. Your when are you going to get out, and in other words, of where your stop loss is and where your take profit is. Just that simple of rules. If you can do that, if you can follow that and accept the consequences of whatever happens. If it gives you profits, cool. If it doesn't, all right, thank God I had a stop loss. And you make sure to manage your trade, because we are our own personal hedge fund. Guess what? You become a profitable trader. Just that simple, not that hard, and don't break your rules, and you should be fine. All right. So what I usually do for everybody is I kind of do a recap of everything that's going around the market. So let's go ahead and do that right now. So NQ, for the most part, let's get rid of all these drawings and look at it from a larger scale. NQ for the most part is kind of keeps doing this upper cut through the market, right? They keep on trying to go higher and higher. This is the last time they did that. Well, actually, I'll take that back. About right here is the last time they did that. So we're in this almost like rounding action, kind of like trying to stop the market from continuing to go down. And just like I kind of showed y'all that accumulation phase, I think a lot of this accumulation has started over here, and those that are bullish are still accumulating based on this parameter here. Those that are bearish is the ones that's put in the wedge action here. So right now we're in the middle of a fist fight. There is still some money to be made in the middle of a fist fight. I know I tell y'all, do not jump into the market in the middle of two kids fighting, because we are not that strong. We don't. They will liquidate us before we can liquidate them. But this is the fight that we're on right now. Those that want to see higher prices are buying somewhere around this area. Those that want to see lower prices are probably are selling around this area here ish. Right? So we're kind of like being driven inside of a cycle until one of them give up. Someone's accumulating and someone is going to win this battle. And we don't know when that's going to happen, and that's not what I'm here to speculate. I'm just telling you where the market is right now. So be conscious of this when you're getting close to some of these levels. One level is between 22,036 roughly down to 22,050 to 21,844, and then down here somewhere around the ballpark of 21,037 to 26,94. All right, and if any one of those blocks give out, it probably give you some sense of a continuation and some massive moves. Before there's a large move, there is an accumulation. So the market goes accumulation, breakout or breakdown, accumulation, breakout or breakdown, accumulation. That's just the cycle over and over. During an uptrend, you have your accumulation for an upside. So they're gathering their shares off of everybody that just keeps on distributing in them, right? People that keep on selling off, so they're buying them at cheaper prices, or anticipating that the level's going to hold. It's buying them at cheaper prices, and they're waiting for the markup so that way they can go ahead and distribute it to somebody else that's willing to pay that price. That distribution can also be an accumulation at the same time, and that's what I'm thinking. If we do break out of here, that when this markup happens, right, we're talking about all this accumulation here, right, is going to break out of here. Then we're going to get some type of distribution, maybe a little lower, right? And then down here needs to turn into another set of accumulation. If it doesn't, there might be a lower distribution and then breaking down, and there's your markdowns. So this is marked down just for us to get back to places that they can have more buyers, more accumulation happening, which is very similar to what happened here. Distribution, accumulation, but lower distribution. But wait, no extended markup. I'm a markdown. So we got ourselves a little bit of a wedge. This is what we're looking for if we're going to fail. That should have happened here. And since that has not happened, and we're on a bullish run, chances are we're probably looking to break out of some levels here. So that means we could get ourselves a nice little accumulation here and break out. Our distribution will then happen. When that happens, we needed to get caught at previous distribution zones so that way they can accumulate. There might be some more distribution, extend, and then start the trend all over again. So that's what I'm looking for out of NQ for a larger scale, unless it just completely fails on some of the levels. But yeah, that's what I'm thinking is going to happen. And this happens in a lot of tickets. Let's keep that same philosophy and get over to oil. Look at oil here, right? We had a strong level of accumulation. We had distribution, markdown, distribution here. Why? We should have distribution up here, because that should have got caught. They attempted here, and they attempted right here, but they couldn't break out, so we don't have a mark up here. So then they distributed like, ah, this is not working out, I'm out. But then they reaccumulated here. Ah, man, forget this, I'm out. Accumulated here. Ah, come on. Oh, there we go. We got ourselves a nice solid distribution. Then we got another markup and off that accumulation. We got to change a character right in that center area. What happens? Breaks out. We start to fill some gaps and imbalances because whoever was distributing here, they took their profit somewhere here, here, or here. If they're still in, they're upset and they're getting out here, here, or here. And then we get this nice little solid markup right into this area, and that's the other distribution zone that should have turned into distribution. It did not. It broke out, and then when they came to test it, another distribution, it did not hold, and it created a markdown. So that's what oil is doing right now. And I think the reason why oil is doing this, again, we're still here. We're still here. We're in this over glorified consolidation that's been here since after the breakdown in 2022. They don't want oil to be below here. They don't want it above here. We're just going to try to figure out, and we're just basically making this basketball bounce until somebody picks it up and take their next shot at this area. So we'll see. Oil is a very tricky one for those that's trying to long-term swing it. Here's gold. Perfect example of its accumulation distribution. And a nice little markdown. Bang. We sat on top of a previous distribution zone. They kept on distributing. It did not break down. We continued up. Accumulation. Ooh, we didn't break out. So the accumulation phase was failing here. So there was a large distribution at a previous distribution zone right here, especially these dojis. I like dojis for order blocks. And then we came back down into this area, but we did not mark down. So that means those that were selling, distributing here, they can't find lower prices here. So guess what they have to do? They have to reverse their position, and that kind of gives this cascading effect. And they took out this area, marked up against them. So if they try to distribute, they end up getting liquidated throughout. I think that's where we are right now. Got into that 2,900, which is a solid number. I think we're going to get to that 3,000 since we're already up here, but it's not showing strong bodies. Like this was a strong body. Strong body. So I think this is probably would be considered a strong body candle, maybe. But we had 1, 2, 3, 4, 5, 6 weeks of bullish momentum. This was the beginning of January. Told y'all to plot out silver. Silver is even showing weakness as it gets close to its distribution zone and this distribution zone. So I think this could put some weight on top of gold if silver doesn't break down, because people will start cashing out their commodities. Here is the British pound. We're back at that level. Let me come to the daily. I plotted out this level because this is that detachment level. We were kind of like pushing up here while the market was still pushing down, and I felt like the market was accumulating so that way they could go ahead and catch up to the British pound, and I think we are here. The British pound being here so we could get a nice little rejection which will strengthen the dollar. Probably the reason why we're dropping right now. Yeah, I think if this has some follow through, let's just draw a line here. Draw a line here. Let's draw a line at the bottom of this candle here. If we break this line right here, because this is a micro trend, and I've taught y'all this if you've been on my YouTube for a while. Here is our bang, yeah, about right here, right? This is where our markdowns finished, right? So now we're breaking out of this box. They came back to retest. They noticed they can't break this level, so the distribution zone here is being tested for the second time. If this turns into an M pattern by breaking this pivot, we're going to continue to go down in the market, and the dollar is going to strengthen up. That's what that's pointing out. That's what that's saying. Okay. All right, so let's go ahead and keep this going. We got natural gas. Natural gas is trying to find a little bit of a base, but I think they put it in a bear flag. We're going to be going into warmer seasons, especially with spring. So natural gas could get affected here. So just keep that in mind if you are playing natural gas. Russell. Ooh, they are liquidating that market down. I thought about playing this, but I was like, you know what? Let me just come and give you all this video before I have to hit the road again. Um, Very, very interesting Russell accumulate. Okay, I warned y'all. I really did warn y'all. I said at the end of the day, with these tariffs and everything else, tariffs mean more domestic exchange of goods, more domestic strength of goods. So we're going to get this more like inside of America type of thing, right? So where's that? That's the small caps. They don't have international exposure. Who can get affected? Right now, Tesla's getting his butt whooped, and I'm going to run through some of my red lists. Tesla's probably going to be part of it. Um, Tesla's getting his head rammed into a wall a little bit because, again, tariffs affect American-made products. So China's purchases Teslas, but if Teslas are more expensive than Huawei's or whatever is Zhangpeng and all that stuff, EVs that they have in competition, it basically eliminates some of the customers that they have in China. They're probably going to go with the Chinese version, just to kind of give you a little bit of insight. So you don't want to be exposed to a lot of international based companies. Microsoft is kind of like the standard, and then there's Google, which is also quasi standard, but they do have their Baidu's and everything else over in China. They have the competitors, just like TikTok and some other name that they have as well. So I think this is going to have a major effect on the market. I think the real play is going to be the Russell as they start to embrace small caps. I love how this is coming through the zero line here. So if they start to take their cash out of large caps like your NQs and your ES and all that, keep an eye on the Russell. And the last one is the infamous dollar, right? This bad boy right here is the one that turns the tides around the market because the dollar is the standard and everything else. We had a nice little move to this upside roughly around the beginning of February. A lot of why we kind of had that massive move to the downside because that dollar was up there. It was up there. But that bounce came in real strong and everything else. They try to take out this level again, mark it down without any follow through. It's going to scare those that were here, here, and here that they can't get lower prices. So guess what? They're going to reverse their position. And that was one here, one there, and this is an accumulation zone. So if this dollar breaks out, we're probably going to get some real low levels on some of these tickers. Just keep in mind. It is right on top of the zero line on the MACD, which kind of gave you a little bit of some type of manipulation action because it looked like it was going to fall right through. And if this curls up and cross, then we're going to get a continuation where they kind of liquidate everybody, knowing that it's going to go up. A little bit, a tiny bit of a hidden bullish right here on the oscillators if it crosses. So just a little food for thought that oscillator is slightly lower than that previous oscillator. All right, that said, I'll give you 5 minutes of my red list. Let's go ahead and get into the red list. I like to use my first NQ chart for that. All right. Oh no, that's my earnings list right there. Let's get my red list. Now, you know what? Let's stick with the earnings list. I'm going to bounce around. All right, so here's Tesla. Now, Tesla was very interesting because I really thought we could break this 88 area somewhere back here, and it didn't. Then I said, okay, maybe we'll get another shot at it, and then it didn't. And then when it rejected here, it gapped down under the 88. So I found this very interesting because I had a feeling 88 was just not going to hold. I really didn't think 388 was going to hold. So now pre-market we're at 371. I do think Tesla could get into the 345-ish, somewhere around that ballpark. And that's going to be real tricky for Tesla to kind of recover off of because they were sitting on a kind of stilt itself. And if they were going to make a bull flag breakout, they should have did it. And this is our retracement points. Let me put this as levels so that way you can see everything. No, not that levels. main, and extend right. There we go. Right. So I do think that we probably could get a bounce around that 345 area, maybe even 350. But I think it's the real bounce is going to be around this area here, between this gap that's there and here. So if we get a nice little solid bounce there, we might curl this MACD and save it from going into bearish territory. But for the most part, you got that peak, and then that peak, and then bearish divergence, and then not a follow through to try to reverse it. So that signals continuation. Hence the reason why I was looking for the 388 to fail. I know it was on the bullish side, but they tried to cross it. They could not. They tried again. They could not. And that kind of tells me 3 strikes and you're out. So we're probably going to go down. But we'll see what happens there. Another one. Starbucks is going completely hammer. I think I plotted this out for y'all a little bit. Kind of looks like a crazy W. We're at the center pivot ish, getting there. I think the next distribution zone where everybody's going to sell off is probably around there. We had a gap. Yeah, we had a gap. We're in the gap. I think there could be a nice little accumulation of the gap and get into here. We'll see what happens there. For those that remember me talking about Starbucks, we was talking about Starbucks on this gap fill that failed. So this was a great failure swing, which gave us our head and shoulders. And if this extends to where I think it is, you're talking about at the very least 121. But again, it got to get past this. Not that pivot. It has to get past this pivot right here. You can tell this was a distribution zone. So let me go ahead and do one of these little exercises with y'all right here. Nope, wrong one. Not there. There. Right. That was the distribution zone. So do. So what happened here? The market said, "Oh, this is distribution. Let's get out of here." So they started to, take their position. But then the buyers were like, "Yeah, we're gonna go ahead and finally step in because I was waiting for a pullback." And they got in the air, and then I was like, "No, that's not cheap enough price. Here's a manipulation sweep." And then they get the manipulation sweep. But then over here, we're gonna go bearish. We're gonna go ahead and come down. And guess what happened? It did not happen because this trend line that they created off of 2 candles to a third got broken, and they went ahead and were like, "Yeah, we're going in, we're gonna knock them out, let's go, we headed to the pivot, let's go." And then we're gonna get our W move, which is gonna be that center pivot. I apologize for such a cartoon character that I am, but that's the only way I see it, is because I kind of think as if it was people on the other side, not just computers, even though right now trading is all algos. Anyway, moving on. So we got ourselves that. Coming up, earnings. Let's go with Snow. Snow's earnings is going to be on the 26th of February. Let's pull this back a little bit. Oops, sorry about that. I just hit my mic. All right. Snow is coming up to a wedge. Oh, this is a great bump and run. Oh, when did I draw this? Yeah, I probably drew. Hold on. To kind of give y'all a little preface. I probably drew this. Again, I don't come to my 8 grid a lot. I have other charts that I use. Yeah, we made a lower low when we broke right below this level. I did not update this chart. So that lower low that was created right here is created off of this pivot. Where's my pivot dot? Where are you, dot? Okay. It's created off this pivot. Coming off, yeah, because I could tell this was when I wasn't using magnets. That was the accumulation right here. Oh man, that was the move. That was the move. I have not looked at Snowflake in a long time. You know the funny thing about it? A good friend of mine was telling me, check out Snow. And I have not looked at Snow in a while. I've been looking at Snow from another perspective, but not this trend line. When did I draw this? I'm gonna see if let me see if I did it in historical videos. I don't think I did this recently. Oh my god, that was your pivot right here. Breakdown, they made a lower low. They finally broke through this trend. If you accumulated anywhere here, it never made another low ever since. Let's see. Solid earnings. Solid earnings, even a greater surprise. They're anticipating 20 cents a share here. 17 cents. If they could do another surprise here and maybe turn it to a 1 billion estimate, I think this thing is going to fly. This thing is going to fly right through here and break out. Keep that in mind on the 26th. All right. That was 45. All right. So let me give y'all one more and then we'll get out of here. I think Disney had earnings. Uber made me mad. Uber is doing some funky stuff. Very, very funky stuff. Yeah, actually, why would I not? The other day I did Datadog, Pan W, and Crowd, and I didn't do Snowflake. Interesting. Very, very interesting. All right, so Uber really made me mad because I knew they could have this little bit of a potential, but you literally baited the whole entire market, including me, with this micro trend right here. And I thought it was going to just hold and get the rest of this value gap, but it looks like the market's like, we're not ready. But they smashed their earnings. They smashed their earnings. How can I explain this? They're $11 billion in reported revenue, and they're generating an EPS of 2.7, and then they're $65 a share. So if that's the case, right? I want to see if I can remember one that's 11 billion. Let me do AMD for example. AMD is 7 billion, and they reported an EPS of $1.08, and they're dropping. So I think part of this drop was because of the fact that everybody's pulling their money out the market. But if we're doing a ratio, we're talking about $1 to 110, right? This is probably double that because what we're talking about, almost $3 for Uber. Almost $3 per share. Actually, I take it back. Here's the true number. This is what they estimate. This is the surprise. So $3 per share. So this should be based on just using AMD for example. Not saying that that's the way we're going to catalyze that, but you're talking about this is 3 times what AMD could do. So I'm thinking people are coming out of companies like AMD. Let's see the video. Only because I just want to do this as a comparison for giggles. 125, but they're a $35 billion revenue company, so it's safer. So this is why top and bottom line, you always hear that. Top and bottom line, what's the bottom line? The bottom line is this. The top line, we get what they bring in revenue. What if they control their expenses, then they could actually raise the EPS. So we'll just go ahead and wait till they actually fix their problems. That's how they kind of see it. But this one found an extra $1 billion. If you find an extra $1 billion, that sounds like a sound company to me, right? This one is 125, and they're returning this much. So this could be one that people pull out of. Just get enough. I just want to do this exercise with y'all. Just stay in a tech space. This is Dell. Their EPS is 24 billion. What I'm saying is there is a sense of value over in Uber. And if anybody knows, I do not care for the company. I do not like their practices. I don't like their ways. But again, the numbers are the numbers. It is what it is, right? Look at it. It's at a value state. I don't think Uber will drop below $59 ever again. I just don't think so. The only thing that could probably make it drop under 59 is there's a massive sell-off in going into, because they got international exposure. And there's a massive sell-off, and then people start running into companies like Lyft. Right? Lyft is their competitor. They are not in the same space as far as Stratosphere. This is a $1 billion company. They return 28 cents to their shareholders. Their guidance was this, which are they taking any stabs at their market share? They did expand their footprint a little bit because they're starting to do some of the deliveries and the rentals that Uber technically does. But Uber has a whole plethora of things that they do there. So to kind of put it into perspective, I'm not saying run over to Lyft, but you probably could get some cheaper valuation from a Lyft because they're only US based, and this thing could probably rocket as people get out of Uber cashing out some of their profits. It hits a level like a 59 again, and then it just bounces. Then they cash out from Lyft and go into something that has international exposure. So just keep that in mind with the ride share. Even though they're a technology company, hey, listen. I'm just saying. I don't call them a transportation company, but for some reason they are listed as such. That's a whole other conversation for another day. That said, I gave y'all a strong hour of a whole bunch of information. I hope that really helps you. Don't forget, my one-on-ones are going to be turning back on around February 14th. I might turn it on earlier for you to book at February 14th. But there will be no dates before February 14th. Just keep an eye on that. Also, if you're a funded trader and you're trying to get yourself an account, down below there is a 65% off on all of everything that they have to offer over at Elite Funded Trader. Go ahead and check them out. Don't forget to click the link down below. That way they know that Jeff sent you. And then also, I want to say thank y'all because this is really, really fun for me. I like doing this. I like looking at charts and I like sharing it to everybody. So if you do like some of this information, don't forget to DM me. That way you can have access to my 8:15 class before I jump onto YouTube. You can DM me at Instagram, JD_the_great, and I'll be able to link you there. Yeah, that's about it. That's about it. I want to say thank you because this is how I have my fun. I love the charts. I love everything that's here. And I wish y'all the best. And hopefully I can turn this into a profit. And I see y'all on Saturday for Mindset. Or Tuesday again right here on YouTube at 8:15. 8:45 actually. 8:45. My inner circle folks. 8:15. All right. You have a great day. Bye-bye.